All right, well, we're going to go ahead and get started this morning. Welcome to today's Monday morning mortgage update. It's a light crew. It's Martin Luther King Day, so I hope you guys enjoy the holiday. I'll be working, try to catch up on the activities for this weekend. So I'm going to go ahead and start sharing my screen now, and we can jump into kind of what's happening in the markets. Now, the markets are closed today. As you can see, markets are closed today. However, I didn't want to postpone this meeting because there's a lot of important things that happened last week. One of them has the bond market reeling a little bit. So I want to go over kind of what happened last week. What happened to rates? Are they going to stay steady? Are they going to continue to come down? Is this a little blip on the radar? But we saw a pretty big move upward on the 10-year treasury. So I'm going to jump into that real fast because it's a pretty big move. It was kind of surprising, but I'm going to zoom in on this real fast and show you. Now, if you were on my kind of mortgage update, talking about the spread between the 10-year and the 30-year, basically that's shrinking. So the rate on a 30-year compared to the rate on the 10-year should be right around a 2% spread. It was up to 3% difference. So that spread is squeezing. However, whenever the 10-year does move higher, mortgage rates typically do as well. And you'll see it's a little bit of an anomaly. I'm going to show you the 10-year versus the 30-year movement. If you see this candlestick on Friday, the 10-year went all the way through this Fibonacci level right here, all the way through this. Notice how the 10-year went up to it and bounced off for a long time. The last couple of months, it's bounced off this and gone downward. And that's held as a nice ceiling of resistance. Quite a few times it bounced off here, 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 here. And then it did not bounce this time. It went clear right through and went all the way up to the 200-day moving average. So again, when the 10-year goes up like this, usually the 30-year does the rates go up as well. So I'm going to show you what happened to the 30-year because it's interesting. We didn't lose as much. We only lost a little bit that day. So I'm wondering when the markets open on Tuesday morning, will the 30-year, since we bounced beneath this Fibonacci level, will we lose more to catch up ground on the 10-year? So this was the day right here. If you zoom in on this, this was the day right here. This little spot right here, this little speck at the top of this candle wick was the day that rates hit their lowest point. And guess what? The news and everyone out there was blasting from the mountaintops. Rates are below 6% again. Well, it didn't last long, as you can see, because the very next day we went below this Fibonacci level and then came back up. We went below it, came back up, went below it, came back up. We stuck right here. Now we're below it again. So it didn't last long. So the difference between the peak right here and where we are right now is 70 basis points, almost one full discount point we lost over the last 5 days. So this just goes to show you how volatile it can be. And if people are waiting for rates to drop, the window of opportunity to lock the best rate in at the best time is very, very, very narrow. So yes, rates are still good, but they weren't as good as they were right there. So we're going to really watch to see what happens as the markets open up on Tuesday. Will we rebound and come back above this mark, or will we lose more ground and will the 30-year catch up to the 10-year and lose a lot more and maybe hang out on this what is the 25-day moving average right here? Will we bounce down to that? So let's look to see what mortgage rates are. Keep in mind, markets are closed today. So the markets have not had a time to adjust to the losses of Friday. So if you look at the rates on Friday, you'll see they were in, this is a nice little chart on Mortgage News Daily, kind of telling you what the trend is right now. We lost ground on Friday. We're above 6%, as you can see. So rates are still better than they have been, which is good, but they weren't as good as they were. So if people are saying, I need a rate at 5.5, 5.625, yes, you can still get that, but there are points involved. You have to be careful when you're looking at mortgage advertising, because mortgage companies almost all of them will advertise a rate that sounds really, really, really good to make the phone ring. And when you really look at the details of it, it's with discount points. It's with the best scenario possible, 30% down, 800 credit score, single family detached, primary residence. It's the best of the best of the best of the best. And not everyone fits that perfect column as far as where they're going to land on the rate scale. So this is the best of the best. And to prove that, if you look at this Learn About Our Rate Survey, if you click on that, it tells you exactly what they do. And it says, look at that, 25% down, 780 FICO score or better, etc. means primary residence, 15-day lock, all of the best of the best of the best when it comes to the borrower. So there's a historic mortgage rates. Some pretty interesting charts are in this website. And again, this is Mortgage News Daily. So if you ever want to get some information on there as far as where rates are, it's a really cool place to go. So what's happening this week? Of course, today the markets are closed, but tomorrow China is going to see what their internal government Fed funds rate, I guess you can call it, would be. And then ADP has a preliminary estimate of jobs on Tuesday. We've got pending home sales on Wednesday, as far as and also a bond auction and some construction spending. Construction spending, that'll tell you kind of what builders are doing. That's a little bit ahead of the game. So if construction spending is down, we know in the near future there'll be less new homes being completed. And then on Thursday, initial jobless claims, continuing jobless claims, the GDP. That's going to be interesting to see because keep in mind, when there is a hot economy, mortgage rates get higher. So we want a relatively neutral economy. We want the job market to be a little weak. That'll help mortgage rates, and we want inflation to be down. So right now, inflation is pretty good. It's not all the way down to where the Fed wants it. Jobs are a little weak, but then every once in a while we get a surprise by the BLS jobs numbers, and we know what happens with BLS job numbers. They come out, they look like they're great, and then 3 months later they revise them to show what they really are, and they were terrible. That's happened many times over the last several years. So that data is just not reliable, but it does affect the markets and affect mortgage rates for the worse. And then when they revise them, it doesn't help. They're stuck in their worst levels when they do that. So we have PCE, which is the Fed's favorite gauge of inflation. So we'll see what happens on that on Thursday as well. So CPE, PCE, a lot of inflation numbers. Thursday's a big day. So let's keep our eye on Thursday. I'm going to be really watching the markets. And if we need to lock in before markets tank, I will. But if we get better because of these numbers, I will float and get our customers better rates. Then Friday, we have the Bank of Japan with their rate announcements, and then some consumer sentiment index on Friday as well. So this week, Thursday is going to be the volatile day. We're going to really watch to see what happens tomorrow morning to see if what happened on the 10-year, which is right here, this big move upward, to see if this will have any lagging effects on what the mortgage-backed securities do when the markets open tomorrow. Hopefully they'll hold, but they are below this Fibonacci level right here. Anytime they close below a level, this Fibonacci level now becomes the ceiling, and it's harder to get above that. So most likely we'll bounce down to this 25-day moving average or lower. We don't want it to go below that, but if you look, it's held as a nice floor the last couple times. Nothing except for down here, but it's held above here for a while. So we'll see what happens there. All right, so that's an update on kind of what's happening with mortgage rates. When it comes to mortgage programs, we do have a couple new programs. If anyone's looking for lot loans, we do have a lot loan available now with 20% down, up to $500,000 loan limits. So that's exciting. We do have a home equity line in first position. You might know it as the Life Changer loan. It is a loan that is basically your income gets deposited against the balance of the mortgage, and you use your mortgage as a checkbook. The cool thing about it is it's simple interest. So if you get a lot of good deposits in your account, your mortgage balance goes down, and the interest is calculated daily off the lower balances every month. So you could rapidly pay off your mortgage if you stay disciplined and if the amount going into the balance is a lot more than what's coming out of that account. So if you want any information on that life changer loan, that's what it's been marketed on the radio for a long time. Let me know. I'm happy to go over that in detail. And now we'll open it up to some Q&A. Do you guys have any questions as we move into this week?
No, that was a
All
lot.
right. Questions are, where are those septic companies and why aren't they open on Martin Luther King Day, right?
They're coming. They should be
Good.
here between 11 and 1.
That's
A life
fantastic news.
changer loan. I haven't heard that commercial.
So there are some radio commercials that are out there. The way that interest-only loans work is very unique because the interest on your payment is based on whatever you currently owe for that cycle, for that month, the interest based on that balance. So if you pay down principal aggressively on an interest-only loan, the next month you will only owe interest on that new lower balance. And it recasts every month. And on the life changer loan, they calculate the interest on a daily basis, add it all up, and that's what you owe at the end of the month. So if you have a huge paycheck going in and then all your payments go out at the very end of the month, your interest will be lower for that period. Now, this is not a good loan for somebody that is paycheck to paycheck. It's really for somebody that wants to pay down their principal aggressively and has the ability to do so, and has the ability to not just spend everything that they have on that credit line, because it is a 100% fully accessible credit line that you have. So you could write a check for anything and use it over and over if you want. So there is a lot of flexibility there. But yes, it's a good program.
Interesting.
Yeah. Unique program.
Yeah.
Unique, that's for sure. It's not cheap. The rates are based on prime, which plus a margin. So you're probably in the sevens on that program. So it really only works if you're going to be aggressively paying down principal. All right. Well, Lars, Sean, if you guys don't have any questions, we'll get on with our week. And feel free to call me anytime, guys. Have a wonderful holiday. And we'll see you next Monday at 10 a.m. for the next Monday mortgage update. Have a great day, guys.
Bye, guys.
Bye. Have
See
a
you
good
guys.
day.